All right, we're back on. All right, so we were just talking about the dime method, debt, income, mortgage, education. And obviously the part of that I felt really compelled to bring to my clients is the mortgage aspect of it, because like you were saying, if you go from a two income to a one income family, or a one income to a no income family, you don't want to be in a position where you're forced to sell your house, right? I mean, you may want to, but it'd be nice to have the option to stay
Yeah,
if you wanted to.
absolutely.
And another thing that you shared with me that was very practical, but I hadn't really considered it until you mentioned it, was, God forbid the worst happens, you're not going back to work in a couple weeks or in a month, right?
Yeah,
Especially if you have children, especially, um, depending on where you're at in life circumstances, you might be out for 6 months, a
yeah,
year.
yeah,
And so, having the ability to do that and stay home, take care of your children, whatever it may be, and not worry about the mortgage, I think is something that, all of, my clients that I've helped with over the years, that I would like you to consider if you don't already have a policy. Grant might correct me on this, he's the pro, but from my vantage point, at the very minimum, you want to cover that dime, right? Especially the
yeah,
M part.
yeah, absolutely.
Um, we did the dim. We did the dim method,
Yeah,
because education he can figure it out on his
yeah,
own.
yeah,
But but beyond that, I know that there's, you're a strategist, right? You're not just a life insurance salesperson. And that's one thing I really enjoyed sitting down with him, is he looks at, the holistic big picture of what we're trying to accomplish in our different businesses, lives, whatever. So tell us a little bit about, how you work with people in terms of, maybe outside of just covering the debt, income, mortgage, and education.
yeah, absolutely. That's a good point. So, I remember when I was someone was asking me, Grant, you sell life insurance? Like, that is what you decided to play your flag in? Which I understood what they were saying, because I've met life insurance, salespeople before. And so I knew that if I do know how much this can impact people.
Mm-hmm.
But if I'm going to do this, I have to, do it in a way that is, I'm not getting that kind of look every single time I show up somewhere. So I was like, okay, how can I really become a master of this craft
Mm-hmm.
and learn the things that can really help people, not just when they die, but also while they're alive? And so one of my common questions that I really ask people is, how much do you know about the world of life insurance?
Mm-hmm.
Because the world of life insurance is much bigger than what most people realize. And so one of the things that I learned is, some of the biggest banks, some of the biggest corporations,
Mm-hmm.
they utilize cash value life insurance to keep their money safe. And so if people just Google, for example, banks ranked by life insurance.
Banks ranked by life insurance.
Yes.
Okay.
Assets.
Mm-hmm.
They're going to see a list of 3,000 different banks and how much assets, cash value they have in life insurance. 3,000. And so what I tell people is, most likely your money is already in cash value life insurance. So the question is, how much benefits are you getting from it? And so when we go to our banks, whether we have a high yield savings account or not, the bank's whole business model is to sell us on the protection and the accessibility of our money. That's really the bank's. So how does the banks make money then if all they're doing is keeping our money safe? Are they putting it in a vault, or are they utilizing that money?
Mm-hmm.
So they're utilizing that money in a lot of different ways. One of those ways is putting it in cash value life insurance and allowing that growth amount happen, where you can average 6, 7, 8, 9, 10% on that money, keep it safe. But then if the bank customer wants to get their money back, you didn't lose anything because you didn't offer them really anything. And so when people so I'll always ask people, do you want to put all your money in the bank, or would you also like to put your money where the banks put your money? And when they say, hey, if I could get the benefits of what the banks are getting with my money, I would much rather have that. And I love setting up plans like that all the time.
So let me ask you, out of curiosity, I don't know, you may or may not know the answer to this, but did the bank consider that a high risk, low risk investment when they put money in life insurance?
Great question. I feel like you kind of set me up for that one. So there are tiers of capital that banks get to utilize. And so they can, loan it out with mortgages, credit cards, things like that. But there is a tier 1 capital that they have to put money in to designate as safe. And so tier 1 capital is the core measure of the bank's financial strength. So when people are looking into the bank's financials, they're saying, how much money do you have in tier 1 capital? And life insurance is one of those assets that those people are looking to make sure that money is in, because I would argue that it's safer than the bank. And the reason why I say that is that if someone just Googles, life insurance during the Great Depression, they're going to find that there was a lot of banks that weren't giving people money. They were closing up shop during the Great Depression.
Right.
And so
that was like prior to FDIC insurance, right?
Yeah. So then, but the insurance companies were giving cash liquidity to their policyholders when banks were not. And so if you also Google how many banks crashed during 2008, 2009, and you're going to see about 150 banks crash. How many insurance companies went under during 2008, 2009? None. And the only one that was at risk to it was AIG, and AIG got bought up by another insurance company. And so when you think about where's your safest money, I would recommend taking a look at what the banks consider safe money.
Sure.
And I would recommend at least allocate a portion of your money to vehicles like that.
That's actually very interesting. Would you happen to know how the bank would classify a mortgage or
That's a good
type
question.
of mortgage? Because I would presume, going back to the crash of 07 and 08 and how, mortgages were bundled and sold off, that, there's probably various levels of risk that the bank invests in mortgages. But obviously a big part of a bank's investment is home loans. And it's very interesting, though, that they view their life insurance investment as a tier 1 asset, call it, or safe, essentially, low risk. So I think that does speak a lot to us. And, so if someone...
sorry to cut you off, but the reason why I bring that up is because there's a lot of times where people want to get into real estate investing. And so with real estate investing, they have to raise capital somewhere. So they can raise capital in the bank and save up for their, money to look for their next opportunity.
Right.
And so it's I always ask them, why only use the bank while you're looking for your next opportunity? Why not utilize where the bank puts their money and you set up an account like this? And so that's one of the best ways to do it, because now, you'll make your growth on whatever you're expecting out of that real estate property. Whether it is a rental income, whether it's a flip, no matter what it is, you kind of know the numbers of what you're kind of projecting to get. But also when you have your your opportunity fund, so to speak, why not get 6, 7, 8, 9, 10% on that money while you look for your next opportunity? And so when you pair those two together, real estate and life insurance, honestly, I have seen people build tremendous amount of wealth when they're utilizing both. And I find even better than any one or the other.
Well, and we were talking a little bit off camera about you were sharing with me that the FDIC insurance for your bank account's $250K, whereas I think you said a life insurance policy it's
So the regulations to for money accessible to how much they're showing. So when we go into the banks and we see our bank thing, they really only need to have 10 cents of every dollar accessible at any given time, because they're able to loan it out to do that. Insurance companies has to have $2 to $3 to $4, depending on the company, per their death benefit in cash.
Oh,
and so when someone a life insurance company has to be able to pay every single death benefit out if everyone died at the same day.
Really?
Yes, and so
Oh,
that
wow.
is how much money they have on reserves.
And that's something that it's like a government regulation. It's
Yes,
not, so it's not necessarily company dependent.
correct. So some companies
Interesting.
do even more.
Even more.
So there's
Right.
some companies that do $2 per death benefit, $4 per death benefit.
Oh, that's interesting. Okay. So your money would be safer if you're working with, a significant amount of money over $250,000, which, it is a significant amount of money if you're talking simply in the context of, investing in some real estate, maybe, a single family home, a couple condos. Obviously if we're talking about an apartment building, it's, bigger numbers, but, so your money's safer. And then you're mentioning something about the tax advantages.
Yeah. So again, one reason why I recommend people to talk to Dan and understand the tax benefits of real estate, because the amount of tax benefits that you get with the real estate is substantial. But it's the same. But there's also a tremendous amount of tax benefits with life insurance, and so a lot of times people can borrow from their real estate and keep and take tax. Life insurance also is able to take a loan from that asset to keep taxes low also. And so the money that's accumulated within the cash value life insurance policy is tax-free. And so you can, utilize that money without having to pay taxes. Doesn't matter what the government, doesn't matter who's in office, no matter what, we're wondering, is taxes going up and how much is taxes going up?
Right.
And so, real estate and life insurance are the two best assets to have tax advantages when you want to use that money.
So, and again, not an accountant, not a CPA. So contributing to your insurance policy, and there's a million different types, right? So another reason why it's important to get with Grant, if any of this is sounding interesting to you, or you just have more questions, we'll get you his contact info, of course. But there's a lot of these different programs, right?
Yes.
Term, whole life, universal, a bunch of different initials and acronyms, right?
Yeah.
ULP, LMNOP,
IUD.
Okay, so what my understanding from what you're saying is that you contribute obviously post-tax dollars, but from there on out,
it grows tax-free. It grows tax deferred, and you can withdraw tax-free.
Okay, and in terms of utilizing it for purchase of real estate, or maybe you want to open a small business, you can access it without tax consequences.
Yeah, and there's no 59.5 rule. So a lot of times people have 401ks or IRAs where they started this and it's like, man, I can't really touch this money penalty free until I'm 59.5. And it's like, are there any other assets? And obviously there are a lot more assets that people can utilize, so you can use that money before 59.5. And so life insurance is one of those. There's no 59.5 rule, and there's also no 70.5 rule. So there's some people who've done a great job building wealth, and they don't really need certain monies, maybe in their IRAs or 401ks, because maybe they have a pension, maybe they have real estate, maybe they have all these other things. And so now they have this IRA that's, doing great. They're going to maybe leave it to the kids or grandkids. And they're getting letters saying, hey, listen, you're going to have to start taking some required minimum distributions.
Right.
Like, I don't really want to take any required minimum distributions. And so some of those people start look at life insurance as there's no 7.5 rule. So if I'm growing, I'm going to have that money grow as much as possible without having to take any required minimum distribution. And so life insurance has that ability.
Interesting. If one were to borrow against what they've accumulated in this type of life insurance policy, does that have to be paid back, like with a 401k?
That's a good question. The answer is no.
It depends.
I would say the answer is no.
Okay. So that's another interesting, and this is, as you guys know, I love to learn along with you here. So hopefully my questions are your questions, but, and if you have higher level questions, which happens often, reach out to Grant. But, so what I often, encounter is, people who have been saving, but via their 401k for a home, and they can borrow a loan against it. But they do have to pay it back. And I believe it's within 5 years. It may have changed. I don't get too deep into that part of it. Another question for your CPA likely. But with what you're referring to, so just as a recap here, you're saying it grows at a higher percentage of higher interest rate, tax benefits to utilizing this plan, more protection, right, versus the $250K that the FDIC insurance will give you. And if you want to borrow against it, you don't have to pay it. Obviously, you can't, right? But you don't have to pay it back.
Correct. Yeah. And then also, so there was a study done by a group called Ernst & Young.
Mm-hmm.
And so they did 5 different studies.
Mm-hmm.
And so they said if someone just has investments, stocks, bonds, how much wealth would they build and how much legacy would they be able to leave behind? Then they says, what if that person utilized cash value life insurance with investments?
Mm-hmm.
And then what if they utilize an annuity, which is an insurance policy?
Mm-hmm.
And then what if they did annuity plus cash value life insurance? And they saw that anytime someone utilized cash value life insurance bonds with another investment, those always outperformed the ones that didn't utilize cash value life insurance. And so it really is not about, should I get a cash value life insurance policy or not? It's just how do you want it to be designed? Do you want it to be designed for the cash value? Do you want it to be designed for the death benefit? Do you want to be designed for minimizing risk? Do you want it to be designed for the cash value? Depending on how you want it designed, you got to work with an agent that knows how to customize these policies.
Sure.
But if they do, it's always going to be obviously, from my opinion, a no-brainer.
Sure. Well, and, just from the consumer seat over here, I think the reason I wanted to sit down with you and introduce you to everybody that I know is, Grant's going to take the time to ask you the right questions and to sit down with you and design that plan. Speaking firsthand, I've done it with him myself. So, you do want somebody that's not just going to look at this, same thing with real estate, not just going to look at you as another deal, another number, another contract. You need someone who's going to, know the right questions and is actually going to care enough and be patient enough to sit down with you and get at what your real needs are and design that plan for you. So give the guy a call. Why don't you go ahead and give out your contact information? We'll throw it up on the screen also.
Yeah, so it's my name's Grant Wright. My phone number is 805-298-3506, and I'm really here to help.
All right.
So I want to just share this to this community, whoever this community is, or to Dan's community, is one, you have someone that really wants to help you get into your dream home. And not only get into your dream home, stay into it. Meet all of your real estate needs. And there's not a lot of people that will take the time, spend the time, educate you, be patient with you, and see yourself more as just a person of what would I want my family to be in experience. And so this is someone that is the best of the best, and I would dare you to try them out. And I think you'll be pleasantly surprised. So that's it.
Wow, thank you, man. That's quite the endorsement.
Yeah.
So I appreciate that. All right, guys. Thanks for tuning in, and Mike Tyson's going to win.